also.
Right, point taken, Mr. Agarwal, but we are completely timed out on that discussion. We will let you go on that note, but thank you so much for taking the time out and
Thank
joining
you.
us on ET Now. But well, we are now joined by another management on the back of Q3 results. Cummins India, that is actually surging in trade right now with gains of almost 4%. We are joined by the management, Shweta Arya, who's the managing director of Cummins India Limited, who's now joining us. Hi, Shweta. Good morning, and thank you so much for joining us. Shweta, while the revenues have remained flat, the management has indicated at a domestic double-digit growth for FY27. What are the key drivers behind that expected subsequent recovery in FY27?
Hi, good morning. So yes, as you rightly pointed out, for financial year 26 and the financial year after that, we are looking at double-digit revenue growth for the company. Largely, our company operates in segments which are impacted a lot by government infrastructure expenditure and then economic activity in the country. So both of those are favorable at this point in time. As we have seen in the budget announcements, the infrastructure outlay towards different segments definitely gives us opportunities in the future. And then the economic activity, the GDP growth itself, 7 and above 7% as we are anticipating. That all the segments in which we operate gives us opportunities. So because of those, in the domestic market, definitely, we are anticipating double-digit growth.
Sure. Shweta, what kind of pressures on the EBITDA margins are anticipated now due to the volatility in the commodity markets?
So from a commodity perspective, largely copper has been increasing a lot. And copper is a key ingredient in a product called alternators, which our associate company sells. So there will be challenges on that front from our associate company perspective. From Cummins India Limited perspective, steel and iron have largely remained stable. So commodities, other than copper, as of now, we do not anticipate too much changes. EBITDA margin pressures, yes, there is greater competitive intensity in the country, in the domestic market. So that obviously is something which we need to manage. And then exports have stayed lumpy over the last few quarters with no clear trends emerging from the markets that we supply to. And those can cause certain ups and downs going forward. And those could lead to challenges in the EBITDA margins.
Right. Whether your outlook on rail has been positive, what kind of changes in the industry clientele mix do you expect in the future?
So our expectation on the rail segment has been positive because of the outlay by the Indian Railways in the last few quarters and continued investment going forward. So in the applications where we provide our engines, we have seen orders come in, and we continue to see the order velocity, and that is what gives us the optimism and the confidence in the railway segment.
Shweta, in the light of recent announcements on trade deals with the USA and EU, let's just talk about the impact. What impact do you anticipate on your international market exposure?
From a Europe perspective, like many other countries in the world, we have exports to Europe. We are evaluating the impact of the EU trade deal, largely looks to be positive. With the US, very new. We are looking at the impact, but like I said, exports for us is across the world: Africa, Middle East, Latin America, Asia Pacific, Europe, and the US. So it's a mixed bag for us. We are evaluating what the US impact will be.
Shweta, also, what would be your budget feedback in the light of the tailwinds around the data center segment?
The data center announcement is positive, giving tax breaks to organizations who want to set up data centers in India is definitely a positive move. What we need to do more as a country is we need to look at processes as data center players set up their operations in India, and how we can provide simpler approvals to them, easier, quicker, simpler approvals, so that we help the data center market grow in the country.
Shweta, now taking a cue from the entire scenario that's developing for railways, I just wanted to understand, since we're talking about an industry eco-center, and we're talking about, having a better infra around it also, making it, par with the international markets. What are the gaps, according to you, which can be filled in a layered way after the budget, what all has been announced?
I thought you asked me the question about Indian Railways. Indian Railways is actually ahead of many other railways in the world. We are very close to electrifying all our railway tracks. We're very close to almost 100% electrification. And that is not that can be said about many other railways in the world. So investments in railway infrastructure steadily have been there, and there has been upgrade in terms of the trains in the last few years, which continues. From an other segments perspective, uh, definitely data centers is something where we can, like the tax breaks, we can think through easier site approvals. We can think through some of those areas where we can help improve activity in these specific segments.
All right, Shweta, on that note, thank you so much for joining us and giving us the growth roadmap ahead and being in the numbers for Cummins India. But with that, we're completely timed out on this edition of Buy Now, Sell Now as well. Kavita and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.